trying to get to 3,776 subscribers because that's the altitude of Mount Fuji, which is prevalent in the Pokemon franchise. That's why we're calling it the Pokeso Club. If you want to be a part of it, you're welcome to be a part of it. Also, thank you to those who have joined the channel as fans and friends. Super chats, of course, appreciated, not obligated. All earnings go to DRS Book GME shares. I'm going to be kind of focusing in on some of these estimates on this video. So I can't promise that entertainment value will be extremely high unless you're highly interested in GameStop's Q4 earnings, right? What's up, Steven? Glad you're here. So the big picture, the big dogs estimate 1.47 billion in revenue and 31 cents of EPS per share. This is on the adjusted, so it's not the fully diluted with warrants, but it's time adjusted diluted EPS. Regardless, we will see if our estimates end up higher or lower than expectations and what that could or couldn't mean for how the stock reacts. We're also going to do, what's up, Benjo? We're also going to do some referencing to my Q3 estimate numbers to get an idea for, okay, how did I go about doing this last time? What's up, Miller? Glad you're here. How did I do it last time, and was that accurate or not, right? What's the margin of error that we're solving for in Q4 compared to Q3? I'm excited. I'm not going to get into literal exact balance sheet estimates, but because, as I said in Q3, like really there's a lot of optionality for how a company can move around its assets. What's up, pilots, on any given quarter? But I do think, let me go ahead and pull up some GameStop financials, because I do think that because of Power Packs, we will see a couple things within their balance sheet that I'm really excited to see if we do, because you guys probably know I have been consistent from the beginning of this filing, right? The next day and beyond, I've been consistent that Power Packs is not involved, reported within these numbers. What's up, Mix? Oh, Miller's got a trim for taxes, so hoping to see a bump into or post earnings. Yeah, bump would be fun. Best of luck on your tax filing, by the way. I guess you're doing something right in 2025 if you owe some money, right? Are you a business owner, Miller? You don't have to share if you don't want to. So non-current assets, I think we will see that specific line grow a little bit, which it had historically been declining every quarter. But basically, the value of their Power Packs, not the value of Power Packs equity, not the value of the business, but money that they send to Power Packs bumps this number up, basically, as well as cards, like inventory, graded cards that they send to Power Packs. I also think that we will see some other income again, which I'm very excited to find out if we do or not. And what else? What else are we thinking about? Other income, other non-current assets. Oh, and then non-store SG&A. Yes, yes, yes. Which they break out later on in the doc. Where do they? Non-store. Okay, just take it. Just show me. Just show me. Where is it? Well, oh, there we go. Other. So there's a store-related SG&A. Here's the non-store related SG&A. I do expect that non-store related SG&A, at least within the US, will go up again, because when they donate cards to Power Packs, this is where that's calculated. When they send money to Power Packs, it goes in their non-current asset value. And of course, in the cash flow statement, we will hopefully again see potentially some cash sent to Power Packs to see as well. So it'll be fun to see some Power Packs clues within their Q3 numbers, or sorry, Q4 numbers. But it's a little bit like tangential to their Q4, because I don't think that's going to be held within their operating income and operating expenses. Miller does have his own company. Congrats, bro. 25K in euros. Holy smokes, bro. Congrats on a great year, but sorry that tax time is here for you. Andy, strange tweets from Lego. Do I think Lego's in the acquisition, or Lego is the acquisition? I haven't seen the tweets, but I don't think Lego is the acquisition. But maybe I should look up their Twitter real quick. It's night. What's up? Larry Chang did an interview with Nat Turner. I did not see this. He said when asked about Power Packs, he made it seem like it was GameStop's venture mostly. Just interesting. Yeah, I think emotionally it is GameStop's venture. Like, I think the reason that I don't think it's literally like 80 or 90% GameStop's equity is because if it was, it would have to be included within their reported financials. Like, they wouldn't hold it off balance sheet. They wouldn't be able to do equity accounting if they owned a large percentage of the business. But I do think that GameStop is really the driver of it, and PSA is like, hey, if y'all want to do all the work and we get half the business, that sounds great. Sounds great to us if we're PSA. And GameStop's like, yep, great, perfect. The reason I think, let's see, what's the video? It's like 11 signs that all point to, yeah, there you go. 11 Power Packs clues that all tell the same story. This was a banger. Okay, I'm just letting y'all know. This video right here. These are the reasons why I think Power Packs is being treated as equity accounting. If you want to watch this video. And if they are treated as equity accounting, then GameStop does not own 80+% of it. I don't know about this Lego X post. I don't know. Teaming up, I mean, that's from 2024. Okay, I'm not even seeing their current stuff, so forget it. I don't think. Oh, it's literally about a cat. Okay, Lego posted about a cat. That's cool. I mean, I don't think that has anything to do with GameStop's acquisition target. But that would be hype. It's hard to say that it would be GameStop's acquisition target because it is not a publicly traded company. Like, off the jump, it's just like, it's also not a US-based company. Andy says there's been a lot more stuff than that. Why can I not see it? Do I need to like get a... Is there something on Supersonic that summarizes it? Oh, this is like Lego Group. Maybe that's not actually Lego. This is Lego, right? But why? Oh, here's Lego. Is this Lego? Oh my gosh. Okay. Maybe that's not Lego. Golly. Geez. This is okay. This is Lego. So this is one of the things, that cat on their banner. Oh, and their replies to things. Have they been having some replies? I know Lego's launching Pokemon this year, and Lego just started a partnership. Like Lego just started a partnership with GameStop literally when? In Q3. Literally, we are 1 quarter into Lego's partnership with GameStop. So if they have been signaling anything as it relates to GameStop, I don't think it's related to GameStop trying to buy Lego. I think it's related to them like continuing to scale their partnership with Lego. GameStop didn't even sell Lego 6 months ago. Literally. Like, isn't that wild? And we know Pokemon's launching Lego. Obviously, GameStop's brand is, there's a lot of synergy with Pokemon and with GameStop. So, anyways, I think Lego's a great company. I don't think they're interested in selling. But if they wanted to be a public company, then that would be a reason to sell. If the insiders, the private owners of Lego, if they're like, hey, we're trying to capitalize on our business, and if we're publicly traded, we might go for a 40 PE, and if we're private, we're only going to get a 10 PE. So let's merge with GameStop. Like, the financials could make sense, but I don't think that that's the direction GameStop's going. But it would be fun to get to see a more detailed look at Lego's financials and the conglomerate that GameStop would become would be pretty exciting. But it's also like, again, you start looking at the qualifiers of what Cohen said: diamond in the rough, sleepy management team, right? An inefficient business that he's looking to make more efficient. Like, none of these describe Lego. So if Lego's hyping GameStop up, I think it's because they're about to announce something within the partnership, not acquisition related, but it's probably something kind of big. If they are, like, we didn't see anything there, but Andy said maybe they deleted a lot of their posts, which is exciting. It's like, oh, did you say too much and now you've deleted some? That's pretty hype, potentially. But I think it's hype from a partnership perspective, from a sales perspective, personally. Okay, let's start with the old interest income and gains. So starting with Bitcoin, because that's the fastest one. Let's see how I did last quarter. Bitcoin. I wonder where it was. Man, I was modeling Q3 forever. Did I do it? Oh, I did it on a live stream because I didn't want to miss the price point. Let's see. Here's the Bitcoin video. I guess I actually have this one logged on my projections tab. Right here. This is what I estimated, right? Or did I edit this to change it to the actual. Let's see, 9.261, 9.2, right? Let's see, Bitcoin, 9.2. Okay. Yeah, so I basically modeled a 9.3 loss, just barely, right? 9.26. I just barely was at 9.3 instead of 9.2. So what's that for my error? 0.1 divided by 9.2. 1%. I was 1% off in my estimate. Geez, what's up, Hazel? What's up? I think earnings was always going to come first before acquisition, but I think the vote is going to come before acquisition also. But the market crashing is helpful. I do think he's interested in the market crashing. Otherwise, why would you hold all this cash for so long? So I was 1% off in Q3. I think it's a $162.9 million loss in Q4. 162.9 is right here. We had a big old, oh, sorry, let me gray all this out for now so we can change it. There you go. There, that's how you know it's estimates. Estimates. We had this $42.2 million loss in Q3 that was random, and it was related to the warrants. So that 42.2 is not going to happen again because GameStop issued the warrants to everyone, including the convertible holders. That's why that was considered a loss, because the convertible holders technically don't own stock yet. So the accounting rule for that is you have to recognize it as a loss. But they didn't do that again. So interest. Where was my estimate for their interest? Let's see. Where's the cat? Where's the cash cow? Why can't you read titles? Q3 interest. Oh, actually, can I ask y'all a question real quick? I'm going to play this video, and I want to see if y'all can hear the audio. Can you hear the audio? Let me know. Do y'all hear that? You don't hear it. Okay. That's the thing about this streaming from the YouTube platform, is carrying over the audio is pretty bad. Thanks, Trailer and Jonathan and Hazel and Mix for letting me know. When I record. So anyways, let's see the rationale wise. I was basically, they got some of their convertibles, so we had to split the quarter into different day periods. But they didn't receive any new convertibles during Q4, so that actually simplifies that pretty well. And we had basically about an even split between how much cash they put into the 3-month and how much cash they put into the 1-month T-bills. And that ended up, let's see what the final estimate ended up being. Let's see. 91.7. And then I think I bumped it up a little bit later on to account for the cash that they reinvested during the quarter. So I wonder, like, I think I just bumped it like a 0.2 or something like that. Like I probably ended up right around 92, but I don't know honestly, which video. I wish I had the exact number because I want to know, like, should I do that again where I give them a little bit of interest earned on the cash that they earned during the quarter also? Or do I just base it off of their cash balance at the beginning of the quarter and not beyond? Okay, but they ended up at 91.2. So I was at 91.7, and then I maybe bumped it up a little higher from there. So I should not do that again where I give them some credit for the cash that they're earning during the quarter. I'm wondering how much credit I gave them. And I don't know if I'm going to find it. It was very small, though. Yeah. Okay. Let's go with that 91.7. How far off was I? If it really was 91.2, where am I? It really was 91.2. But I thought it was going to be 91.7. So 0.5 divided by 91.2. I was 0.5% off. And if I ended up adding a couple, then I was maybe as high as like 0.8% off. So I was all over it on the interest income, except I did not know that we'd have a $42.2 million loss related to the warrants being given to the convertibles. I did not know that accounting rule. 91.2 in Q3. One thing's simpler, one thing's a little more complicated. The simpler thing is that we have the same number throughout the whole quarter, right? In Q2, well, some of the funds from convertibles landed during their Q3, and so we had to split Q3 numbers for that. We don't have to do that, so that is nice. However, during we now have a long-term rate and a split between 1 and 3 month. The long-term rate, how can I show it to you? Right there, cash is now at 7.8 billion because they moved 1 billion into long-term bills. Right? So we want to take the T-bill, like the Fed T-bill 1 month rate. Let's see if this will tell it to us nicely. Okay, yeah, this is what we want to see. But just show me like more recently. Okay, wonderful. Here's the 1 month. Now we want the 3 month. You're not even going to show me the 3 month. Boom, boom. And then show me the 1 year. How much interest are they going to earn on their cash? So 1 year, 3 month. Geez, there's just such a wide range. So generally speaking, the 1 month, 4.3, a little higher than the 3 month, and the 1 year, a little lower. So basically, if I was 0.5% too high in my Q3 estimate, it's probably because I skewed a little bit too much towards the 1 month and not quite enough towards the 3 month. We also don't know, by the way, like, did they lock up any more 1 year throughout the quarter, right? So like, you don't really know. No, I'll take 0.5% off. I'll take that margin of error any day. But let's just get into it. So we're saying basically, come over here when we're talking about interest earned. Here's the 1 year here, and then this we need to split between 3 month and 1 month. So take the rest of the cash divided by 2, 1 month, 3 month, cash, Fed rate. Here we go. What is the Fed rate for 1 month? We want to pick when is Q4? November, December, January, right? Here's the 1 month. When we are in, can we get just like from here on? Okay, now we're more granular. We like this. November 1st, we were at 4.06. And then basically for all of November, it was at 4.06. And then boom, here's your first rate cut. By mid-December, you're at 3.7. And then you're basically at 3.7 the rest of the way. So these 1 months, they roll each month, right? So basically for 1 month of the quarter, you were at 4. And then for 2 months of the quarter, you were at 3.7. So how do we do that? 33% of the time, you were at 4.06. And then 67% of the time, you were at 3.72. You add it together. Just show me the number. There's the Fed rate for the 1 month. But this is an annualized rate, right? So you got to divide it. you got to put it in 3 month terms. Interest earned. Boom. You take the cash, AQ 5. You multiply it by the Fed rate, AR 5. Nope. Multiply it by this divided by 100. Right now, that's in percentage terms, right? Yes, 3.8%. There you go. There's the cash earned annually. And then you divide this by 12. And then you multiply it by 3, right? Get it the monthly, and then get it back into the quarterly. Boom. There's some interest earned on some of your cash. Let's see what the 3 months want to do. 3 month. take me where I want to be. Here we go. You start in November at 3.78. Then you went down to 3.59, 3.57. So how much of these 3 months do you think they rolled in November versus December? Or just divide by 4. It says mix. You don't want to divide by 12 and then multiply by 3? I could divide by 4. It's a great point. The 1 month is nice because they roll, like, they roll this every month. Like, they mature in a month. The 3 month, it's hard because you don't know what percentage of their 3 month bills, like, how are they spaced out? Do they have them spaced out in thirds to where 1/3 of this expires every month? That would seem to be the smoothest way to do it. But we saw GameStop make a cash decision during Q3, which is that they feel like the interest rate you're going to earn on cash is coming down. So they started to hedge. They said, let me just go ahead and lock up this 1 year rate. Wherever it was at the time. Let me lock up 3.5% right now because I don't want to run the risk of the Fed continuing to lower rates. It turns out so far, the Fed hasn't actually lowered rates again. So far, GameStop might be like, oh, dang, we locked up a lower rate. We actually could have just waited on it because now we could have gotten a 3.68, and maybe during the quarter, they converted more to a 1. That's unlikely because of the acquisition that's coming. I think they probably did not lock up any new funds in the 1 year rate. All that said, I think we go ahead and assume that they're splitting out their 3 month rate into thirds, meaning that they've got 3.78 and then they got 3.58. Boom. 3.78 for the first month, 3.58 over the second 2 months. What? No. Which means they earned another 35 million there. And on the 1 year, they probably locked it up. It's possible they locked it up sooner than October. Like August, September, October is the whole Q3. So they could have locked it up as soon as August 1st at 3.9. Or they might not have locked it up until September. But if they knew this rate cut was coming, you got to think they probably locked it up in October. I mean, in August, don't you think? I could be a little aggressive here, but let's say they didn't time it perfectly, but they timed it decently. Let's give them a 3.83 on the 1 year yield. Oops. Oh, great. That's another 9 million there. Take the sum, 82.8 million in cash money, interest income in Q4, which is a decline from Q3 because rates have come down. So there you go. Boom. Cash interest income minus Bitcoin losses is negative 80 million. Here is why I am not, a lot of people are concerned about the Bitcoin loss. Like, what's going to happen? The Bitcoin loss, it's going to ruin all of earnings. Here's the thing. No one's valuing GameStop's cash on a multiple basis. No one is giving a multiple on earnings to GameStop's cash. They're just valuing it at face value. So if you want to talk about the earnings on the cash and you say, well, look, Bitcoin losses, it's going to be so horrible because they lost money on Bitcoin. Oh, did they really? Their trailing 12-month earnings on their cash and Bitcoin is $125 million. Trailing 12 month is a gain of $125 million. So if you want to give a multiple on that to value GameStop's cash position, great. But the reality is no one's giving you a multiple on this. They're just valuing it at this. But it wouldn't be, no one would model $80 million of losses every quarter from here on out. You know, they would just take trailing 12 month. So if you had another $200 million Bitcoin loss in Q1, which would be offset by another 80 million in cash generated. So net, you would lose, right? If you lost $125 million net, so a $80 million cash bump, $205 million Bitcoin loss. Now, then at a trailing 12-month basis, you're actually in the red. Or really, I guess Q1 gain would drop off at that point. So it actually doesn't have to be that big of a Bitcoin loss. It could be like whatever, a $150 million Bitcoin loss would be enough to do it. Which for them to lose another 150 million on Bitcoin, I mean, Bitcoin would have to end at like 50. Like Bitcoin would have to be at 50,000 a coin for that to happen. Like that would be pretty wild. But it's possible. But like that's what you would need to see before all of a sudden Bitcoin losses are actually weighing on their interest. Okay. Other income is interesting because I think this is basically the Power Packs number. And what is the Power Packs number? In Q1, I thought they did 30 million in sales as a total entity, and that GameStop, and that they had 12% margin on those sales, which means a profit of $4 million for Power Packs, GameStop's portion of that being $2 million. So of the $3 million that they reported in other income in Q3, I think 2 million of that was attributable to Power Packs. In Q4, I think this number is more like 80 million. Not 8 million. 80 million. Could be less, could be more. We'll see. To work backwards, well, let me work forwards and see what needs to be the number. Okay, 5 million or so gets you to 80 million in revenue. We'll call it 83. If they still had 12% margins, Power Packs would have cleared 10% in profit. If they are letting all of that profit fall to the bottom line. they could be reinvesting all that profit aggressively and making sure that none of that profit actually is hitting the bottom line. That's why I've said several times that this number, as it relates to power packs, doesn't mean anything right now, because what people really want to see is this number, the revenue number, and that's what we will not get to see until they disclose it. And they won't disclose it until they have to. But hypothetically, perhaps we see about another $5 million in other income, which estimates, what are estimates again? 1.5 billion in revenue, earnings per share. So if EPS is 0.31 times 447 shares, that means they think they're going to have $138 million of earnings. If this is 139, but this is negative 80, and that's known. The negative 80 is basically known. So if the estimates are saying 31 cents a share, non-adjusted, right? The undiluted share, 447 million shares. That's 138 million here. I'm going to italicize this so we know it's not my estimate yet. That would mean that analysts are saying operating income is the two of them put together, right? Net income plus the Bitcoin loss. So analysts are, man, is that true? Holy smokes, guys. Let me italicize it. Golly. Let me italicize that also. Analysts think GameStop's going to do 219 million in operating income for a net income of 139. 219? No way. Up from just 80 in Q4 of last year? Holy smokes. It's a $139 million improvement year over year in operating income. That's what analysts are projecting. I was just talking about, I haven't actually done the estimates yet, but I was talking about a $73 million improvement. I've been getting y'all hyped over the past couple weeks about they might have a $73 million improvement to trailing 12-month operating income. And the implications of this estimate from analysts are that they will have literally almost double that, a $139 million improvement year over year in operating income. We'll see if my estimates agree with that. Jonathan says sounds like a setup, as in maybe there's no way they accomplish that, and it's just set up to disappoint post earnings. We'll see. All that to say, as it relates to power packs, if they have 200, here's what you need for this to stay consistent. This number right here, that $10 million number, cannot be more than, I think it's 10%, right? What's the standard? 10% of the total net income for power packs cannot be more than 10% of GameStop's operating income or net income, for that matter. And if they have over 100 million in net income, over 100 million in operating income, then a $10 million power packs operating income would not trigger materiality. $83 million in revenue cannot be more than 10% of GameStop's revenue. So GameStop would need more than $830 million in revenue, which they will easily have. So I am on the record officially. I do not think Power Packs will be disclosed in Q4. I do not think they will reach materiality, but I think that GameStop's other income might be like a $5 million little bump to their net income, which would be pretty exciting. Yes, Trevor. I did talk about Bitcoin. We've done Bitcoin, we've done cash, and now we have done Power Packs. Pretty exciting. Income tax. I mean, look, am I really going to model income tax? You know, do I really have any idea? They still have plenty of NOLs. So, you know, but it looks like they're starting to pay a little bit more in income tax. They did, what did they pay last year? 7 million. Right. Yeah, we know that. But of their operating income, like 7 divided by 84 is 8.3%. The year before, 3.4 divided by 20.8 was 16%. So where are they going to be, you know? Where are they going to be? Let's just call it 3.2 divided by, oh, this is 3.2 divided by 79 though. Oh, but they have the interest income also. It seems to me like it's, I don't know, 10%-ish is probably high because they're NOLs. Eventually they'll be up at like 20% like all the other corporations. But regardless, right now you're looking at 143. Let's say they can do 8% again. Something like a $12 million tax. Let's say they pay 12. Who knows? I don't really care about taxes. I should care. Which, by the way, though, if they're paying 12, that means this number is even higher, right? Plus the abs of the sum of AJ 25 to AJ 27. Boom. Golly, 225. It's just wild. Okay, asset impairments. I have no. What's up, Blessed Beyond Measure? Hey, great to see you. I have no idea. Like, I don't think France has sold yet. I think they would say if it has, I think they'll probably end up selling it in Q1. That way, the year-over-year comps to Q1 kind of smooth out because they sold Canada in Q1 of 2025. So I think they sell France right here. Sell France in Q1, which means I don't expect a large asset impairment in Q1, or sorry, in Q4. But I think you will see one in Q1, maybe similar to the size that we had with Canada. I don't know how many stores were in Canada compared to France. We could definitely look that up. We'll estimate that later as far as Q1 numbers. But with Q4 numbers, like I think something smaller is probably more likely as it relates to asset impairments. you know, let's just zero it out with power packs so that it's nice and round, right? We're projecting other income of $5 million and we're projecting other losses of $5 million. So net, we're expecting, we're projecting a raw GameStop experience here, right? Let's say that France doesn't screw it up, Power Packs doesn't blow it up. Let's just look at the raw retail numbers. What's up, Rushi? What's up? Hey, you guys are starting to trickle in here. Thanks a bunch for being here. Everyone hit the like. Hey, thanks for the notification. The stock. Really excited to see if we hit 23 over or under. Just a couple of days until earnings. Very exciting stuff. Let's do SG&A so that we can finish up kind of the below the line numbers, and then we'll get into the juicier parts, which are margins and the revenue numbers. Blessed Beyond Measure thinks we are doomed unless we absolutely slay earnings because of the reality that a lot of companies are getting having a lot of multiple compression happening. It's certainly possible. Okay, let's see. Non-store related SG&A, I think, is going to grow. Does anyone happen to know in the chat? Does anyone happen to know how many cards were dumped at the end of Q3? You know that guy on Reddit that tracks? What's up, James? Yeah, we'll talk stock implications post earnings. We'll get there. Does anyone know, like, that guy that tracks all the cards that GameStop sells? And he displayed like how many of them were whatever, what the number went to. It was like within the last week of Q3, like last week of January or so, or mid-January. This number down here, right? Right now it's at 2,100. Does anyone remember what number it got to? Or no? The reason I'm asking is because when I think GameStop is moving them to power packs, right? They try to sell them here for as long as they can because the margins here are higher, right? You just want to pay me 30, 40% margins right off the jump. Great, I'll sell it to you. If you don't, I'm going to move it to power packs and then I'll make 12% margins again and again and again. And we'll do it that way, you know? But when GameStop moves them over to power packs, they recognize non-store G&A, non-store SG&A, according to the value of the inventory that they contribute. So in Q3, about 6,600 cards were moved over at a $50 per card estimated average value. That was about a $0.4 million increase to non-store SG&A, which actually did end up being the actual increase to non-store SG&A. So that was pretty epic. But I honestly don't remember how many cards were moved over. It's also not that important because the reality is that GameStop's non-store SG&A is declining in other areas of its non-store SG&A, right? So even though one area is causing an increase, other areas are declining. And so what is the net impact to non-store SG&A on any given quarter? It's a little bit hard to predict. But let's just say it goes that bump is pretty interesting too. I wonder if that's normal for a lot of non-store SG&A to bump in Q4, right? From 35 to 50, Q3 to Q4. is wild. I wonder if some of their holiday promotions, maybe even some of their holiday employees are like somehow, they smooth that out from their stores and they call it non-store. Because store-related SG&A came down 13 million, but it was just offset by non-store. That's super interesting. Well, let's start with the top line SG&A, which was 282. So top line SG&A for Q1, Q2, Q3, and Q4 of last year, for 4 quarters in a row, total SG&A has gone down by 21%, 22%, 20%, 21%. Or you could say 21, 23, 19, 21. Like, that's a pretty consistent trend. You kind of just want to say, gee, I don't know. What if SG&A comes down 20% again? Like, let me get crazy here. What if it's just down 20%? AB 19 times 0.8 would get you 226 in total SG&A for Q4. Now, the thing is, they're not going to keep going down 20% forever. It just can't happen. But we know that they closed a bunch of stores throughout 2025. So I don't think we are done with the top SG&A number declining by an impressive amount. So I think they're going to be able to sustain that 20% trend in SG&A decline. And I think most of that's going to come from the store-related SG&A. And some of that's going to be maybe offset by non-store SG&A. So if we say that, let's just throw some numbers out here for a sec. This is probably too aggressive. This is 13 million. Man, that would just be insane. Problem is we don't have the breakdown from years past. Like if we're saying that the top line comes down, geez, this really could, this could be lower than that. It might be even lower than 226. But you gotta like a slight bump Q3 to Q4. Like you just gotta have it. They had it in 2023. They had it in 2024. They had it in 2022. Right? SG&A always comes up, even though they're closing so many stores. But it was basically flat last year. And this is what we have again happening, where it's like basically flat, but a little bit more of an uptick compared to last year. What's up, John Today, channel member? Great to see you here, man. I'm really curious what to, like this, to me, this is one of the most exciting numbers in all of the like this is one of the numbers I am most excited to see out of anything from this earnings, because I don't think we're going to see power packs. I don't think we're going to have acquisition news. This number right here, the SG&A number, is like it's top 3 for sure. It might be top 1. I need to think about that. Maybe that'll be my video on Monday. Actually giving you an order. So I hate to just be like, oh, there's no way they're going to do 226 and then just start bumping it up from there. Because what if they really do? What if they really do 226? But non-store related, it might bump up. So Q3 non-store barely came down year over year. 0.7 million. And then it went up 14 million quarter over quarter. You think 14 is probably a little high. Like this number at 53 seems a little bit high. What if we go like 175 and 51? 177 maybe and 49. A tiny decline year over year, but a slightly larger increase quarter over quarter, basically the same. It's basically the same. This is kind of what I think. 177 store related, 49 non-store, 226 total. That's what I think on SG&A. What do y'all think? Too high, too low? Am I getting too aggressive on SG&A? Getting pretty excited. SC says not aggressive enough. Hey, some people are trying to get excited to dump some money if it goes below 20. I don't think it's going below 20 again. I don't. But I'd be pumped if it did. I mean, in the super near term, I'd be sad, but it'd be a very attractive value if it goes below 20. So I'm saying they can continue a 20% decline. I'm not, it could be a 20, 21 or 22 or 23% decline. I think there's room to beat these numbers for sure. I do think that. But I'm trying not to get too crazy because you want to leave at least a little bit of room. What's up, T-Rix? You do want to leave at least a little bit of room to be pleasantly surprised. You know what I mean? Okay, let's get into hardware. So hardware, as far as my Q3 estimates, this is where I dropped the ball on every single one of my toes. I dropped it, I picked it up, dropped it again, picked it up, dropped it again. I just made sure to break all 10 of my toes on my hardware estimate. And I'm trying to find what the estimate was so that y'all can see just how off I was on estimates. Oh, but maybe I should do that for SG&A too. Where is SG&A? I wonder actually what I did. I do not remember at all what I put their SG&A at. I really don't have this that well organized, huh? Sales growth. Yeah, I don't know. Was it in Alive? Yeah, we did not even. It's not even. I don't honestly keep a record of my estimates because the estimates don't matter. You know what I mean? Like what matters is the real numbers. But SG&A, I'm pretty sure I was pretty close. Like, man, I really want to know actually. Golly, didn't I before? Like I don't know. Was it in here? Did I do anything? This is all. Did I ever hop over to the performance tab? Oh, yes, yes. Okay, great. I had 209. There you go. I had 209 in my SG&A, and the actual was 221. Okay, so I was too low for show. What's 209 minus 221? 12 million. 0.4 off divided by 221.4. I was 5.6% off in my SG&A estimate in Q3. Okay, I confess. Now hardware. I had 625 in hardware, which the actual was 367. Golly, man. So how far off was I? Just so you all know, $258 million off. I was 70% too high. Okay. So here's what happened with hardware to give you the short story. I've told it plenty of times on this channel. I was running tons of year over year and cycle over cycle percentage estimates based off of this one number, which was the only number we had for any of Switch 2 sales. And I was like, okay, well, in other cycles, in the first quarter of the cycles, this sales number meant this for the following quarters, whatever. Here's the thing, though, is Switch 2 broke the system. Switch 2 broke all trends. It was so hotly anticipated, so highly desired that it pulled forward so many sales that basically no one bought the Switch 2 in Q3. So there were no trends to be built off of Q2. And so any trends that you tried to draw using Q2 as a somewhat of a barometer ended up way off the mark because this was not a good barometer to use because of how much pent-up demand uniquely impacted Q2. That said, what we did later on in the channel was like, man, is there a way we could have adjusted? Like, in hindsight, could I have done a better job modeling the hardware? And so I went to Nintendo sales in this video, and I was like, if we use Nintendo's reported numbers to give us a better estimate, like where would that have put us for GameStop's hardware? And let's see if we can come up with what the final number was. It was something like, well, no, that's the actual typed in. Basically, it got within like 2% accuracy. I know you can't actually. There's the store closure. Where? Oh, there. 157 million for new consoles. 157 million for new consoles. What's up, Punky? Is what the sorry for that digression, guys. Look, I'm live. Oh, what's up? What's up, me? What I ended up with using Nintendo as the clue, I still left some of this data out here so that we can try to tackle Nintendo Switch sales as it relates to how does that inform estimates for GameStop's hardware sales in Q4. So let's see if we can do it again, and if we can get a little better than 70% too high. We'll see if we do. Punky, I talked about power packs earlier. I don't think we see materiality, but I do think we see 80 million in power packs revenue and 10 million in power packs income that will not be reported. Okay, where do we go? Where do we go? I want to see the switch. Sales breakdown by category. Okay, it's all... Are you doing this daily? Oh, these are year over year. Okay, show me quarterly. Here we go. Getting a little warmer. By category. Can you show me in USD? Or is that too much to ask? Maybe it's too much to ask. Here's the Americas. I mean, yeah, it's basically all... Okay, here we go. Here we go. Let's try to Q1 to Q2, Q2 to Q3 Americas was a 6.5% decrease. Q3 to Q4. Look at that. It went from 217 to 320. 320.2 minus 216.7 equals 103.5 divided by 216.7. 48% increase, or 47.8% increase. That's a good sign. Q3 to Q4 in Nintendo America's sales. What else we got here? Nintendo, one thing to note is that Nintendo's quarters are normal quarters. So GameStop, you know, their financials, their Q3 includes October. So October obviously wasn't a huge portion of this, 48% growth. But October probably had more growth, more sales of Nintendo Switches probably did occur in October compared to January. But the bulk of this 320 in yen probably happened within November and December. But if you wanted to say, well, Nintendo's looking at October, November, December, GameStop's looking at November, December, January, then you would want to say, well, if January is a little lower than October, then probably 47.8 is a little bit aggressive, right? Particularly if October was also included in GameStop's Q3 number, and it wasn't in Nintendo's. So GameStop also maybe has a slightly bigger base that they are going off of quarter over quarter compared to Nintendo. So I know there's a way to make this. Oh, is that it? Oh no, I just that's not it. I know there's a way to make this in USD, which I would really appreciate. But I'm not exactly positive. Show me, because I want to actually do a decent. I want to be like in the ballpark, you know. Nintendo Switch sales USD. Is this going to show me? Million units. 10,000 units. Okay. But these are all units. Can't you tell me like something a little bit more exciting? There's 71 million or 71 10,000 units. 71 over 160 is 44% as far as units sold in the US. So there you go. That's already a little bit of a adjustment. Nine-month earnings. Show me this guy. Jeez, I do not like reading their financials. Got off to a good start. Pokemon Legends crushed. Okay, well, we're just going to go off of the freaking yen numbers. Okay. This was a likely share of their Nintendo distribution. I don't think that matters as much as long as we have the quarter-over-quarter numbers. So I want to adjust this down to probably closer to like 40%. And then basically it's like how many stores closed during Q4 and or Q3. And it's like if we lose another 5% or so due to store closures, but most of Q4 store closures probably happen in January. Most of them probably don't happen in November, December. So maybe we don't need to adjust for store closures too much. But if we had a 40% increase from Q3, 367.4 times 1.4, that would make this number 514. Let's play with these numbers and see if they kind of add up for now. 514 would still be lower than Q2. Does that check out? Show me by quarter again. No, it looks like it would be more than Q. Oh, geez. The problem though is the difference in the quarters. It just makes it hard to say. Show me by category again. Look, here's the Switch. About a 10% decline quarter over quarter, but GameStop's decline was much sharper because GameStop had June and July, which encapsulated all of the pent-up demand because the Switch came out halfway through June. Whereas Nintendo, this number is just 2 weeks in June. And then it's July, August, September right here. But holiday sales, I mean, it's like almost a time and a half higher than their Q2, but their Q2 was just June, right? So, but June was most of this. June was a lot of that number. T-Rex says he hasn't heard of many store closures this quarter, man. I don't know if you're joking or being serious. T-Rex. Are you being serious? Because there have been some articles about a ton of stores closing, but regardless of articles, you know they're closing stores because they have said in every 10Q and every 10K that they're going to keep closing stores. So they're definitely not done closing stores. It's really just how many. Geez. If GameStop went down from 6, if we add this together, right? 959.92. 592.07 divided by 959.92. So this is like 62% of June through October sold in June and July, according to GameStop's numbers. Now I want to, so if you take these two numbers, 55.6 plus 510.1, then you get 1.065 equals 1.065. If you take the same percentage with Nintendo, then hypothetically this number would be 657 instead of 556. And yeah, similar figure checks out there. 656 up to 785 minus 785 minus 657 is 128. Divided by 657, about a 19% bump from Q2. So this would be like Q2 times 1.19 would put you more like 704. $704. I think that's closer than what do we have before? 514. I don't like being higher than Q2 though, because I did that in Q3 and I got burned so bad. But we just did it, right? We pulled forward some of the Oh, but then we need to adjust for October versus January. So basically give me like 90% of the 20% growth. And then you're at 635. Okay. But the real number could be like anywhere from somewhere like 500 to 750. You know, like on the super low or super high end of hardware, you're thinking somewhere in this range, and I'm basically putting it right in the middle. Fiscal 2025, 470 closures. I think it's closer to 1,000 T-Rex, but we'll see. They'll report it in their 10K. That's when we'll get the official number. 635. What do you think? I think that's probably where you want to be. Let's see what it does to our earnings numbers. And let's dive into software. Okay. Software. Where was I with software? 205 and it ended up being 197.5. 7.5 divided by 197.5. I was 3.7% off in my software estimate in Q3. I think that I probably should do what I did last time then, which is basically just year over year type numbers. By the way, what does this mean? Oh, gotcha. If Switch 2 did 634, that would mean that in Q4, they sold 33% of their full year hardware, which would be a little bit low. Right, last year it was 34%, but the year before it was 36%. Right, 36% of their full year hardware sales came during Q4 in 2023. 34% of their full year hardware sales came during Q4 in 2024. I do think it's right for that number to be lower. So I do kind of like this estimate. The math does seem to kind of check out to me. But do it from AB. This would be a 12% decline from last Q4, which given like a 30% decline in stores, I think probably, again, that probably checks out pretty well. The companies that account for software sales are mostly like Nintendo and Xbox, like it's console games and PC games. So there's console. What major games came out in Q4? Okay. So it's mostly Pokemon. We'll see. Switch 2 games are probably the big driver here, which in the Nintendo, you gonna show me games or not really? Not really. Okay, software. Software in the past 3 quarters, software has gone down 26.7%, Battlefield 6 and Pokemon Z to A for sure. 26% and 27%. So similar to SG&A, you kind of just want to be like, what if it comes down 27%? I don't know. Call me crazy. What if it goes down 27%? Like for 3 quarters in a row to be on the same trend line is pretty nice. I think this 635 might be a little low though, because hardware was down like after this huge pull forward. Sorry to go back to hardware. We're going back to hardware real quick. After this huge pull forward in demand, which almost artificially hurt Q3, the Q3 year over year was still only down 12%. And now you're talking about holiday sales, the first holiday for Switch 2 being out, and you're talking about it being down even more year over year than Q3 was. I think that's probably a little bit too conservative on hardware, to be honest. Like what if the October-January is only a 5% difference, and this is actually more like 670? Then you're at a 7% drop year over year. I think relative to Q3, we're probably getting closer with that number. I kind of want to say like 525 to 750. So I want to pull that up a little bit because I don't think Q4. I just have a hard time imagining because these are top line though. Yeah. These are top line numbers. But I still think the top line number, even with store closures, I don't think it's going to be worse than Q3. I think it's going to be a little better than Q3. Oh yeah, Kirby Air Ride is another game. You are right, Excited Box. What's up, 89 of you guys hanging out in here, talking about earnings? It's fun stuff. How are we doing, by the way? Not too exciting yet. Almost 2 hours left to close. Yeah, SG&A is definitely being impacted by store closures, but the thing is they're still doing store closures. So it's hard to just say like, oh, it's not gonna happen again, Let's get this a little darker. Okay, software. If we're down, what do we need to be down 27% year over year? This would be down 15% if it was 240 or 250. There you go. So this isn't, I'm not finished with software yet, but if you just wanted to say like, hey, let's just solve for the top line software number that equates to a 26 or 27% drop year over year, then you would end up with about a 215 number. Let's think a little harder about if there's any reason why we should break that trend in one way or the other. I did think that this bump Q2 to Q3 was impressive to me from 152 to 197, but it's not historically unprecedented, which is why you saw the year over year numbers actually were even a sharper decline, right? You had a similar Q2 to Q3 last year from 207 to 271, and then about 10% higher from Q4 to Q3, right? 29% of software, total year software sales happened in Q4 of last year. Where does that where are we at with that? We want to take that number. AK12. So do AJ12 times AK14 divided by AL12. Oh, we want this to be AM. Nope. Okay. That doesn't even, am I even doing this right? Just show me, yeah, that's all I care about. Just show me that. That would put us at 29% again. Okay. I don't know if y'all are tracking, but this 215 number, if software does 215, that would be just like last year, about a 10% bump quarter over quarter from Q3 to Q4. It would also be about a 26, 27% decline year over year, which all three of the past quarters have been. And it would also mean that about 29% of full year software sales happened during Q4, which was also about what happened last year. The year before and the year before that, we were higher on software as a percentage of sales. So the decline in software has been pretty sharp. I do think, and it's been consistent, but software literally on the top line year over year has declined just so fast. Like even this number, it should, like this should still be red. These should still be worse. Right? Nope, not that. There you go. Still year over year declines. So you don't want to, but I think like we might, with a new console, I think we might surprise a little bit to the upside compared to historical. But you don't really want to break very far from this trend because this trend is like deep. You'd only want to break it for like GTA next year is big enough that it will really move the needle. I don't know if the games from this year are big enough to really move the needle. And last quarter, I was high. Because I thought, oh man, Pokemon, you got to give a few extra million for Pokemon, right? So I don't really want to go too much higher than this, but if we were at like 222, what does that do? Then we're only at a 24% decline year over year. And we're still in a similar range on percentage of full year sales for software. I don't know. What if I go a little crazy and say the decline slows down officially a little bit due to holiday demand for more games for the Switches that were bought? Do we see that in, I don't know, is the bump from Q3 to Q4 noticeable back in these last cycles? Where are we? Here's software in 2020, right? No, that's hardware. Software. Okay, there you go. Like this was a huge, I mean, just crazy. Revenue literally doubled from Q3 to 4 in 2020. So it's hard to even use that as a comp because I don't think we're projecting to do that, right? We're not projecting to freaking double, are we? 1.6. Oh, but we actually we are projecting to close to double, right? They have us at 1.47. That's what the big dogs have us at. Which means I might be low. Man, software might be pretty spicy. Jeez. And then what about the next year, okay? Console cycle again the next year. Boom. Huge bump in Q4. And not quite a doubling from Q3 to Q4 in revenue. We do see about a double in 2022. Boom, another huge bump. Jeez. Okay, so software, I mean, you see it in hardware too, though. It's tough to be in a place where we're closing so many stores. But you did close some stores these years too. 700 stores in 2020. But that was like 10%, like 15% of your store count, And you basically didn't close any in 2021 and 2022 relative to your store count. Same with 2023. It's historically possible. Huge bumps. But then it starts to cool down and compress a little bit. 2023 and 2024, you start to see that holiday sales compress. Some of that is store closures, but some of that is console cycle, I bet. And I'm sure that new consoles are pretty impactful for new game sales. I kind of want to bump this even higher, but I don't want to be way too high again. Not that I was too high. Like I was, what was it? I was 3.8% too high in Q3. But what we learned is holiday sales don't get pulled forward into Q3, but they do happen in Q4. Like this could be like, I think, geez, man. Like I think 200 is the low end of the range. And the high end could be like easily 375 for software revenue. 29, 37, 38, 36. So what happens, like to get this at 36% of your full year software sales, what do you have to do? 275? Even higher? 300 million in software sales to make this 36% of your full year revenue. What about hardware? What did it do in these different days? See, hardware was 38% happened in Q4, 37, 37, 39, 36, 34. So just holidays in general haven't been as impactful as they have been historically. I mean, dude, this could be 800. Right? Like if this is 800, then that's at 38%. It's just how much, but people are just so broke. It's just hard to think that like, it's hard to model that GameStop will be able to have as crazy of a Q4 holiday sales as 2020 and 21. When in 2020 and 21, like the president's just writing checks to people, like everything's kind of funny money. And like now we're at this point where like gas is doing crazy. I mean, it wasn't in Q4 doing crazy stuff yet, but like people have been getting hurt by inflation for years now. I just don't think you're going to see as big of Q4 Q4 bumps. But I just added another 4 million to my Q4 hardware. Just in case. Get this up to 34.38%. It's tough on fewer stores. It's tough with fewer stores, but I'm gonna, yeah, let's stick with that. And then software, we got to bring this down. It's not going to be 36% of software sales. No way. But what if it's 250? Then you're at a 15% drop year over year. I don't know. It still seems more aggressive than what I want to model. But I do think software has probably a strong possibility of impressing to the upside. We gotta go. The quarter over quarter numbers are just so screwed by how much the Switch 2 pulled forward into Q2. Like, it looks so insane to be like, oh, so hardware is going to almost double quarter over quarter, but software is only going to go up, 20%. And it's like, well, yeah, that's pretty much what's going to happen. Some Grady, yeah, video games do perform really well in recessions. So it's definitely a nice industry to be in because they're a very inexpensive form of entertainment. As far as trading, like, I do think the demand for used games relative to new is higher during recessions, but the total sales is still down because a huge portion of GameStop sales is new. So for every 100 customers, you might have, 40 of them might buy used instead of 25 of them buying used, but you have fewer customers total. So it's still not like a net positive, but as it relates to like GME versus Best Buy or GME versus another full price retailer, it is a competitive advantage to have their trade-in model. I think 250, this is a little bit arbitrary. This trend is just so palpable that I don't like this number, but it just seems so achievable. You know what I mean? It just really does. But they sold tons of Switch 2s, and software still came down quarter over quarter in the first half of the year. So just because Switch 2 starts coming around, like, doesn't mean that software is going to go bananas. I do want these numbers to be lower. Like, I want a weaker holiday. In 2024, as a percentage of full year sales, software, hardware, and collectibles did 29, 34, and 37%. I want this to be weaker. Like, even though we have, on one hand, we have the console cycle, which is it's a boost. On the other hand, we have the economy, which is a drag. And so it's like, I'm basically saying, like, I feel like the economy might be a heavier drag than the console cycle was a boost. That said, many retailers have beaten estimates this earnings cycle, like Kohl's, Best Buy's profitability, Target, Macy, like a lot of retailers are beating. So maybe the economy didn't screw up this Christmas as bad as feared. And really, it's going to happen more in 2026. So, you know, perhaps the console cycle is enough to lift the tide higher than the economy drags the tide. You know what I mean? So I do think there's room for upside surprise with these numbers, but I just don't want to be way out there on a limb. I really don't. This software one's really giving me fits. I think, okay, I'm going to say software comes up a little bit from 29% to 31%, and that the decline in software slows. Just because it's Christmas, though? What do y'all think? You think software is going to slow down? Well, do you think the decline in software is going to slow down in Q4? Y'all tracking with the question? You know what I mean? Basically, are we closer to 250 or are we closer to 215? You know? I guess I should say like maybe 190 is like possible. Here's the other thing though. Right now, my hardware and software together is 909 million. This estimate over here is estimating 1.5 billion. If I'm at 900 with hardware and software, that means I'm at 500 in collectibles if I'm going to match estimates. Now, these estimates might just be way off, but 500 in collectibles would be pretty wild. Like, I don't think they did 500 in collectible sales, but maybe, so that makes me think maybe I am a little bit low on hardware and or software. So just give me two-thirds of that. Yeah, give me 250 for software. Let's lock that in and move on. Give me 250. Collectibles. Okay. You crazy, crazy collectibles. What are we doing with you? What are we doing with you? Last year, collectible sales, 37% happened during Q4. And the trend on this one is up. Right? They were down to 32% of their full year collectible sales happened in Q4 in 2022. Then it shrunk even more to 31%, and then explodes to 37% in 2024 with the announcement of the PSA partnership. That PSA partnership continuing to grow, you would think it would be an even higher percentage of their full year collectible sales might have happened in Q4. However, during Q4 of last year, there was the like craze surge with Pokemon valuation, like Pokemon cards. I don't think we saw a craze as it relates to Pokemon in 2025's Q4. But somewhere in that range is probably still accurate. And let's just throw a number here to start messing with the numbers. What are you doing? What are you doing? AK 15 divided by AM 15. So we're looking at like, okay, so growth year over year. Okay. We would historically hardware. My hardware might be a little. We'll see. We'll see. Maybe collectibles really is more like 500. I mean, geez. Is it really? Probably not. Let's go 400, and then I'll kind of show you some numbers I'm looking at. Okay. At 425, here's some things I'm thinking of. First off, percentage of sales. At 425, collectibles is 31% of Q4 sales. Last year, it had a huge jump up to 20% of Q4 sales, up from 13 the year before. However, this year, we expect another big jump because just one quarter before, it was at 31.19%, which again, Q3 to Q4 last year, it had about a 1% increase, and it was still declining the year before that. But with the PSA partnership, combined with Cohen's interview, right, this infamous interview, collectibles business to be just about a third of total sales for full year 2025. You would think if he's talking about the collectibles business being a third of company sales, that you're at least above 30% for Q4, particularly when you were below that for Q1 and Q2. Like, you might think that as a percentage of sales, it's above a third, so that for full year, it ends up close to a third, right? Then you end up above 30 for the full year if you did 500 million in collectible sales in Q4. That would be a huge bump year over year in percentage of sales and in revenue. But the other thing with the 425 number is you start looking at the growth year over year and the percentage that happens in Q4. At 425, $425 million in collectible sales in Q4, that would mean that 38% of collectibles sales happened during Q4. Last year, 37% of collectible sales happened during Q4. So is this achievable? Yes. Could that be too high? Yes. Again, we had a Pokemon craze last year that might have inflated this concentration a little bit. The other thing is year-over-year growth numbers. So Q1 to Q1, collectibles grew by 55%. And then Q2 to Q2, 63%. Q3 to Q3, 50%. So if they did 425, that would mean that they grew year over year by 60%. A 60% growth year over year, particularly when comped with, 60% growth is possible. The thing is that what we had this Q4 that we barely had last Q4 is right here, the graded card marketplace. And I personally, about half of my Christmas gifts came from here. Like my wish list was like, buy me cards from GameStop. So that had started, that this existed in Q4 of last year, but the inventory that we were talking about was like, it got close to like 20,000 items or something like that. Like it was a huge amount available for sale from their store. So when you're thinking about the Q4 to Q4 numbers, on one hand, you would want to say, well, the sales growth probably came down because the partnership already existed. Whereas with these, right, Q1, 2, and 3, Q1, 2, and 3 of last year, there wasn't any PSA partnership. So surely that artificially inflated these growth numbers a little bit. And that once we're comparing to PSA to PSA, then you would think this growth number would actually come down. That's what you would say on one hand. However, on the other hand, you could argue that, yeah, the PSA partnership in this form was actually tiny, and it also was still tiny in Q1 and Q2. Like it just started ramping heading into this year's holiday sales. And so you could make the argument that actually you would see an even increasing growth rate on the top line. That said, 425 kind of makes it's a happy medium with some of these numbers. If we go down to 400, then you're still at 30% of sales during Q4, which is pretty solid. Pretty solid. And of course, you see the software percentage continuing to come down, collectibles percentage continuing to come up year over year, and hardware staying relatively flat, but slightly down year over year. All of those things are consistent with historical trends. You want to see the collectibles as a total percentage going up, software coming down, and hardware coming down, but less sharply. And that's what we have. But hardware might still be a little low. Software could be a little high. Like if I were to guess, I would think 250 might be too high. 670 might be too low. And as for this 400 number, it's probably too low. Probably. I think it is impressive that in last year they were able to sell more collectibles in Q4 than in Q3. I wonder how much of that was just, hey, we have this now and we didn't before. You know, can they do that again Q3 to Q4 when they already had this in both quarters? I think it's really hard to say, and we have the Switch 2. So I think for the sales to actually come down a little bit as a percentage from Q3 to Q4 in light of the fact that Switch 2 is here and Switch 2 games are here and they weren't last year, I think is probably fair. And on a dollars basis, you'd still be talking about a 50% growth year over year if they did 400. If they did 425, you're talking about a 60% growth. I think that's totally possible, but you know, where do you want to put yourself at the end of the day? And of course, you could just keep rising the total ship. Like these are all relative to the total number. You know, so 425 as a year-over-year growth and as a percentage of collectible sales, these percentages stay the same. So if you like those percentages, you're Gucci. But if you think that this percentage is too high, then you could say like, well, maybe this is actually 697 instead. And then, okay, well, now it rises your top line a little bit, etc. If I go with a clean 420 here for lols, 58% year-over-year growth, 31% of full year of Q4 sales. What do y'all think? It's Me BK says, do we think RC will soon announce the warrants timeline will be extended? Seems impossible for us to get to 32 before October. I do not think he's going to extend it, and I think it's very possible we get to 32 before October. Grady thinks we might miss analyst expectations. That's another thing I've been thinking about, Grady, is this top line number. Like, look at Q3, for example. Estimated 987. Oh, geez. Estimated 987. Actual is 821. So estimates were $167 million over on the top line, but under on the bottom line. And if you've been following GameStop for a long time, that's kind of become a theme over the past couple of years, especially as they've bolstered their balance sheet with cash. It's like usually the top line's too high, the bottom line is too low. And okay, we beat on earnings, but we missed on top line. So the end. Right now, I have us missing on top line. And I am 1.47, 1.34. So what's that? $130 million under estimates on the top line. If these are the numbers, I'm still kind of fiddling with it a little bit, but again, where I put my exact number is not really the point. What I'm most interested in is having a general feel for the longer term trajectory of the business. I think I want to prepare for what if holiday is slightly weak. If this is 405, then you're slightly less as a percentage of full year sales, still 52% growth. I kind of like 405. Let's play with that for now. That would put you at, but the range that we're thinking of here, like, I mean, we did 265 last Q4, 256 in Q3, like, and you've seen what, a $16 million improvement quarter over quarter, followed by a $30 million improvement quarter over quarter. I don't think you're really looking at anything less than 275 on the top line. And or on the bottom end of what you'd expect for collectibles. And on the high end, I mean, what is 550 possible? 550 is probably a little rich. 500, I think, is kind of in play. So let's start getting into cost of sales, margins, and kind of implications for the stock after that. But on the low end, I am looking at a kind of worst case revenue, 525 plus 190 plus 275 of 990, just under $1 billion in top line, and best case of 800 plus 375 plus 500 of 1.6 billion. pretty cool. I mean, quite the range there, you know? Quite the range. Now, what about margins, gross profit, cost of sales? What's the number gonna be? Let's go over to the margins tab and see together, my friends. How we doing, by the way? What in the world? They really do not want me analyzing estimates. Wow. This is getting kind of exciting. Is the whole market going ridiculous right now on this Friday afternoon? Ooh, the SPY down 1.5%. Whoa. Down 5.5% year to date. Yeah, this is spicy for sure. Look how blood red. Oh my gosh. Everything's red except for freaking energy. You gangsters. Ha ha. And for some reason, Visa is green. Wow. Demon Clippy said, this is the bang emoji. Yeah, this is pretty, when you're invested in a high floor negative beta company, this is pretty stinking exciting. Oh, Aramco just announced they're suspending all operations. This is fine. LOL. Yeah, the meme of the dude sitting in the fire. Wow. Okay, I'm glad we're watching this together. This will be really, this just sets up for a really exciting earnings, because you just don't know how, as it relates to hedge funds short GME, like asset values plunging, or especially if it's happening across all assets, it just increases the possibility, it increases the likelihood that margin calls could come. And that is just crazy. Orange Man calling for rate cuts, of course. Crazy. What a time to be alive. Wow. Okay, what do we with margins here? If we're saying, what did Q3? Okay. Pre-switch, we were at 26% margins. And then when Switch dominated hardware, it was about a 21%. And then when Switch fell off a cliff, it got back to 25%. I'd say hardware is probably something like 23% for Q4. So 0.23 times the hardware portion. Now let's see what else we get. What else do we get? 23% hardware margins. What do we think we're going to get on software? Let's see here. Software was maybe at a 49% in Q2, and then maybe down to 45 with the increase in new software being sold in Q3. We did see, okay, so yeah, probably want to stick to 45, maybe even bring it down to 44, but let's put it at 44. Plus 0.44 times the software portion, AK14 divided by AJ12. Boom. Right? Boom. Okay, there's software. Now for collectibles. Aw, geez. Aw, geez. Collectibles seemingly came down as they got a little bit more aggressive on buying cards. From 36 down to maybe 35. Let's say they're at that 35 again. So I'm not projecting any margin improvements across any of these lines, but they could, like, let's just start with this and then we'll get there. Right? Could they actually improve? We'll think about that together. 35 times, what are we doing here? AK15 times AJ12. Boom. Oh no, divided by. Holy crap. So that would put you at 30%, which would be lower than Q3, but higher than Q2. Lower than Q3 because no new consoles basically sold in Q3. So, you know, Q1, this nice 34.5, we're not going to see that again for a little bit because new consoles don't have high margins. You break down their margins by line item and it's like, yeah, sorry, but you can't get 40% margins on freaking brand new Switch 2s. Like, it's just not going to happen. So, if Switch 2 and new Switch 2 games are the primary catalysts for hardware and software revenue being higher, then guess what? Margins are not going to be crazy. However, let's go ahead and let software keep the 45%. So 23% hardware, 45% software, 35% collectibles. Basically keeping everything static. Honestly, hardware might be a little high. Again, in Q2, new hardware of the 592 that they sold in Q2, I have 56% of that coming from new consoles. It would not be as high as 56% in Q4. Right? 670, like 335 of that would not be new hardware. It'd be slightly less than that. Is basically what I'm saying. Right? 330 got you to 592. So if you're $80 million higher, then hypothetically, you know, the new console portion of that is going to be less than 56% of the total number. So I think 23% is maybe still fine. I could call it 22, maybe 22% on hardware. So 30.32. What do you think on margins? What did they do last quarter? Oh, let's go. Okay. Okay, so last Q4, they were at 28.33. And you saw a decent dip, like a 5% dip, Q3 to Q4. This one has a dip Q3 to Q4 as well. A little sharper, more like 10%, not because of any dynamics related to quarter over quarter, year over year stuff, but just related to Switch 2 pulled forward into Q2, going AWOL in Q3, and then coming back online in Q4. So there's my margin guesstimate right there. Excited Box says the average person gets 6 games for their console. Fun fact. So if they have 33% margins, And that means their cost of sales would be top line minus the profit line. Boom. Oh, don't be doing that. 992 or 922, I should say. And their gross profit would be AJ12 times AJ18. Right? So net sales would be up year over year in this hypothetical. We would miss these expectations on the top line by about $130, $150 million. But cost of sales would actually be about flat. So you'd have about $37 million more in gross profit than you did in last year. Accessories do go into hardware. Yeah, that's what the accessories are here. I estimate a 36% margin on accessories. This is all based on like old stuff on my channel. If you wanted to learn some things, some of these old videos are like fire from a the pumping up video, super good. Where is it? Like, I would like to solve for, oh, forget it. Solving for their margins. Maybe it was a live. Well, who knows? It was a series of several videos, so I don't know why I'm not even able to find like a single one of them. Bunch of margin stuff. Margins. Oh, the pre-owned biz. Yeah. Yeah. I love some of these videos. Y'all didn't really like them because they were too nerdy, but that's all right. That's all right. It ain't nothing personal. Anyways, margins. This will be fun to do. I don't like to do this in advance anymore. I like to do this more post numbers. So once we get these numbers, we will have a much better idea of, okay, how much did you sell new versus used? New versus used. How much did you sell raw versus graded? Like, whether or not I'm exactly on point with these margin numbers isn't really the point, because if you notice, there's a pretty wide gap between everything else and this, right? So whether it's used versus accessories versus electronics, it doesn't matter. It's just like the total numbers, like we know the revenue number, right? We know the revenue number, and then we know the total gross profit number. So if you have 3 revenue numbers, 1, 2, 3, then all you need is the 3 gross margin numbers that necessarily, right? You pull out your calculator and that equals the total gross margin. And within each category, there happens to be a line item that's a much lower margin: new consoles, new software, raw cards, and another line or several line items that are much higher margin: used accessories and electronics, used digital and PC, and PSA graded cards. So it is actually like really insightful, but I know some people don't like getting that nerdy on the company. What's up, Punky? He said, I watched most of them, but they did get real nerdy. Thanks, Funky. What's up, Beckett Cat? Great to see you here. So let's start crunching some numbers. If GameStop does freaking $400 million in gross profit, and if their SG&A is only 226, that means SG&A as a percentage of sales would only be 17%. Look at that compared to last Q4. 22% Q4 a year ago, 17% this year. So their what does that mean? It means that their SG&A is declining faster than their sales are declining, right? And sales actually, I'm projecting an increase in top line year over year, which is sick because we did not get that in Q3, right? Top line came down and everyone thought, oh no. Everyone thought, oh no, because it was higher in Q2 and we thought, let's go. Top line growth. We're finally here for the growth. And then boom, Q3, top line was actually down year over year. And we all thought, oh no, store closures, right? We're closing too many stores, right? Like we're going to be screwed forever. We're just going to trade sideways forever because we don't have any top line. Well, here we have, in spite of store, I mean, these are just estimates, right? We're just talking about, hypotheticals, you know, but we're estimating actually, after another quarter of even more store closures, actually, we're potentially still beating on top line. And these estimates are $150 million under the estimates. So we would still miss, right? You could still have that headline of, missed top line expectations. But what they wouldn't be able to say is year over year sales contraction. And what they definitely wouldn't be able to say is comparable sales contraction. Because comparable sales, right, same store sales, would be up huge. And this will be the first time that we see what the new store count number is. We haven't gotten a store count update since here. So part of why I've been so bullish on GameStop over these quarters is because of the same store sales going bonanzas, right? They're retaining way more customers, even with way fewer stores, which is increasing their efficiency and profitability substantially. And that's got me hyped. It's got me jazzed up with some jazz hands. You know what I mean? And so same store sales, if we can increase top line while continuing to absolutely explode sales per store and decrease SG&A, I mean, that's just pretty gangster. So let's see, do we beat or miss the operating income projections? So this, the implications over here of 0.31 EPS meant that in light of Bitcoin loss, cash gain, some income tax, it basically meant that they're projecting 225 of operating income. Is that what we are projecting? Let's see. I'm looking at $401.5 million in gross profit, and I'm going to take out 226 in SG&A. That would put me at 175.5 in operating income. So I would be much lower than estimates on the bottom line if that's the implication that they are going with. And let's go ahead and illustrate that here. Equals AJ 17 minus AJ 19. Now we can grade out with the rest of our grades. Oh. There you go. Now you, oh, I got to do the asset impairment also. Plus AJ 23. 70 year over year, what happens? Boom, that's a $90 million improvement year over year in operating income. 91 millis. 91 millis. Beckett says, I was actually able to toss out my FA for you. What's FA? Free agent? Financial analysis? Freedom Alliance? I want to be a part of your Freedom Alliance. For sure, dude. 170.5. So then down here in net income, we get AJ 24, AJ 27. Boom. So my net income projection is 83.4 million, which does not matter as much because we don't really care about the Bitcoin loss other than the fact that we lost. Oh, fundamental analysis. Got sniped by the chat. Sorry, dude. Oh, we're tanking? We tanking? Let's go. Let's go. Oh, we're almost in power hour, guys. We're almost in power hour. This is crazy. This is so like, I don't know. Hopefully y'all feel zen. If you don't, then just keep hanging on the channel. Keep looking at the truth, which is the actual performance of the company rather than the near-term lies. 83, so 170 in operating income would be a $90 million improvement, which means this number would be like a 257. And we'll have to see what Australia ends up being literally, but if the floor PE, you want to call it, is 15, that brings us up to a 20.8 floor, which is $1.40 higher than last year. But if you want to keep the floor PE the same and say, hey, 20 is the true floor, then your floor is at 23.67, which is up, almost $4 higher than a quarter ago. I don't think we'll stay above 23.67 indefinitely because I think the floor PE is getting lower because of the macro. So that's a little bit of bad news, I guess, is that if a Target can trade at 12 and if a Macy's can trade at 10, well, like GameStop can probably trade low too, So it's not like the stock is immune to being attacked as far as the actual stock price goes. But when you think about the firepower, particularly if they announce buyback, there's so many tools in their tool belt that they can use if it's time to press the button. Will it be time for them to press the button yet or not? I think between March and July, it will be. So, or between April and July, I guess I should say it will be. So super, super exciting. And overall, this quarter, better than I thought, right? I had imagined a 73. This wasn't an actual estimate, but kind of back of the napkin math. I thought, hey, maybe a $73 million improvement year over year. But instead, we are looking at a $91 million improvement, or 90. And 17 divided by 9, that's 19% better than what I thought. And most people call me a bull, right? Most people call me a bull. And I think that these estimates look like 19% better than what I what I had imagined. Look at that. Operating income Q4, 80 million. Operating income Q4, 170 million. Ooh, that's just nice. It's not real yet. We'll see. But let's get into some numbers of what does that mean, like percentage-wise. Change in gross margin, for example, year over year. Show me a B18. This would be a 7% improvement in gross margins year over year. So this would seal the 4th consecutive year of gross margin improvement. Pretty awesome. On SG&A, sorry, let's keep all this. Well, we can just, whatever. We'll keep them black. We'll gray it. We'll gray it. Let the people know. SG&A, AB. AJ40. What's AJ40? Oh. Yeah, that's wrong too. That's wrong too. How far are these wrong? Okay, that's Q1. That's Q2. It's just this one. AA. Great. AB. Another 20% decline year over year in SG&A. Another 56 million in savings in profit year over year. I mean, look at that. On a 1-year basis, that's $236 million in savings just in SG&A. That's crazy. What's up, Excited Box? The thing is, we don't know how many Switch 2s were sold in January. He's saying 1.3 million were sold in October. Do we know? I mean, do we? How many Switch 2 sold in January? Do we know? Cumulative sales. Japan sales. Come on. Do we know? This is just Japan. How many Switch 2 sold in January in the US? Or sorry, in the Americas. $225 in January. Okay. This is what I want to know. October versus January. 404. Okay, wonderful. So so that's a pretty huge difference, actually. But I think I already adjusted for that a different way by putting Q2 and 3 together. But let's think about that for a sec. 404 minus 225 is 179. Let's do 225 divided by 404, actually. 56% of the October sales And then that's crazy. Did not do great in December. I mean, in November. $9.98. This is what we should actually do. $9.99 plus the 260. Wait, is that just US or Americas? Okay, we need Americas. We need Americas. 1,200 plus 268 November plus 225 January is 1,693 units November to January. And then if we're doing take out January and put in October plus 405, you're looking at 1,873. Okay, don't be doing that. Units. And if we're looking at 1,693 divided by 1,873, that's 90%. Okay, great. So if we come down to 90%, we're back at that 634 number. 1,289. Oh, still got that year-over-year growth. What happens here? What happens here? If we leave everything else the same, do we want to leave everything else the same? 52% year over year, 31. Yeah, I think leave it for now. Margins actually come up a little bit because as a percentage of sales, hardware comes down in that case. Gross profit is now at 393. Operating income 162. 162.8 minus 79. An $83 million improvement year over year, which would put this at 250, right? 3 to get to plus 177. No, 260. Nice. Nice. Okay. We love that. And now we're got a little bit more conservative. I think that's probably closer to accurate, honestly. It's just hard. It's just the Switch 2 it's just tricky. It's early in the life cycle. $75 million in net income, which EPS wise would put you at 17 cents of EPS per share. So if these are the estimates, then I'd have us missing on top and bottom line. Someone earlier in the chat said these estimates sound like a setup. I would have to agree that the estimates do seem like a setup because they are, throwing on an extra 200 million on the top line and almost double net income. It's almost like they're excluding Bitcoin or something like that. I don't know why. Which, they're really not excluding Bitcoin. It's based on a 1.5 top line. If this was 1,500, then why does that not go up? Oh, because these numbers haven't changed. Okay, fine. If you said we did 30% on 1,500, then you're at 450 in gross profit. that's still just like, I don't know why they end up with 31 cents of EPS. Operating income quarter over quarter would literally quadruple in this case, which is pretty epic. Because 450, then this number, whatever, this operating number becomes $60 million higher. You're basically looking at a 220 minus the 87. It's 133 divided by the 447. So even at the 1.5 billion, I would still have their EPS at 30 cents a share, not 31. So I think those estimates do seem high to me. What's up, Miller? Yeah, we're still here. Oh, we're not down 3.5% for any good reason. No need to worry about that. So anyways, when we think about how would the stock react to this, obviously if the market keeps taking a dump for the next 50 minutes, like, you just don't know what that's going to mean for Monday and Tuesday momentum on GameStop as a negative beta play. But setting that aside, if you think about, miss on top line, miss on bottom line, like that's the, that's all you need as far as a narrative to justify, hey, let's go ahead and that can be our plausible deniability. Let's go ahead and short attack the stock. Like that's what you can do, But when you start looking at the numbers, it's like, wait, how many stores did we close? And top line is actually slightly higher. Wait, margins are improving again. Wait, operating income is more than double from a year ago. Like, this is insane. The Bitcoin loss is one time in nature, right? Like, you take the Bitcoin loss out. Let's just say Bitcoin was flat. Now you're at a 238, right? Underlying net income is basically double. But a one-time Bitcoin loss makes it look worse. It's hard to me. It doesn't seem like Q4 is, it hasn't, period. Like at any point in the past 5 months or 3 months, like Q4 hasn't seemed like the quarter where everything blows up to me. It seems like this is the last kind of setting up the T, and the actions between now and July, August set up, including Q1 numbers in June, like acquisition news, like the vote going through, like these all feel like Q4 is setting up for a potentially explosive April to August and beyond. It doesn't feel like Q4 numbers will be the launch to infinity and beyond, but the market crashing makes it seem like, well, maybe it's time, like that's pretty crazy. Change in operating income. In this example, as we've talked about, would be up by 83 million. And that's not right. AJ 42 divided by AB. What's this? Oh, that had to be negative because it was a negative number. 100% growth year over year in operating income. Just wild, right? You're still going off of small bases, but 80 million in operating income isn't that small. 80 million is not that small. So to say, hey, we're growing operating income by 100% year over year, that's crazy. That's crazy. Like the market just responded positively to Macy's earnings. Their operating income was up 45% year over year. And their same store sales were up 1% year over year. Like they just barely inverted sales per store. And the market is like, oh, wow, this is a deep value play. Like GameStop is running laps around many of these other like value stocks. Change in net income year over year would probably be a decline, right? For the quarter, but still an increase for the year, right? Yes. Decline for the quarter in net income, but on a full year basis, a $235 million improvement, which would be almost a 100% increase in net income year over year. You gotta love that. You gotta love that. What does this mean for collectibles? Let's see. Collectibles year over year, you're looking at AK minus AB 15 times AB, a $140 million improvement in cash. And what's this? Percentage. Great. Z. So these should be AA. AA. And then these should be AB. 52% growth in collectibles, which is the highest growth portion of their business, obviously. SG&A per store in this case. Geez, I got a new keyword and I'm messing everything up. Oh, we need to know the stores first, huh? Okay. What do we think on stores? I think because they haven't actually closed France yet, I think that actually presents an interesting situation. Do they say the number of stores here? No. They do in their 10K. I'll show y'all what I'm talking about. Here's the 10K. France, 311 stores. Okay, so this store closure estimator is all related to their current lease liability. But here's what's interesting. I thought France would sell within the year initially. And as a result, right here's current lease liability. I was not really worried about liabilities held for sale. So What am I talking about? The France stores were, for my intents and purposes throughout the year, taken out of the store count. But the reality is they still have the French stores. So they've they're just accounting for them differently. So really I should be adding, like if I add 311 to each of these numbers, or maybe I just take it out of, yeah, let's just do it this way. Plus 311. Plus 311. Plus 311. What happens to sales per store? Still growing year over year, even when you add France back into it. So that's pretty exciting. And I think that 311 will still be here for Q4. When you take that France, that 311, so basically I think that there are 799 stores that have already closed. And I think there's another 311 stores currently being held for sale that I don't think will have sold yet. Will they sell any, like, will they close any more stores during Q4? I mean, probably so. Q4 is always kind of weird. So sorry, I'm getting some text updates on my grandma-in-law. Not looking too hot. Not looking too hot. Like it feels like a crapshoot to say like how many. I wonder what estimates are out there. How many stores did GameStop close in January 2026? Estimated 470. Golly, you think they really did? No way. You think they really did that? If they did that, holy smokes. Like, where did everyone even get this? So it says they shuttered 590 stores last year, which I'm telling you, I think they closed 799 last year. So if this article thinks they did 590, that means I'm 200 higher than them. So if they think they did 470 in January, then I'll just come 200 under them. And I'll say they did 250 more store closures in Q4. Sorry. Minus 250. And then France is still there. And then what happens with all our sales per store numbers? That is the big question. Let's gray all this out. Greytown. Boom. Woo! 600,000 sales per store in Q4 alone. 1.58 million in sales per store for the full year compared to 119 the year before. That's crazy. 1.58 minus 119 to $390,000 more, or a 33% improvement. That's crazy. All right, let me fix all these calculations real quick. Let's doing everything to the full year. Hardware in Q4 up 30% sales per store. Software, let's see if it continues the conversion. The inversion. Yeah. Check it out. I have software bottoming out on a sales per store basis. That's wild. Collectibles. Let's see. 127% year-over-year growth in collectible sales per store. And there you go, 49%. No way. Golly. Yeah, for quarter over quarter. Year over year for Q4, it's a 49% sales growth. Year over year for the full year is a 33% sales growth. And that's going to escalate. That is going to escalate because that's still, like, that's assuming we still have France, right? You take France out of the picture, all of a sudden, it's like bonkos across the board, right? Everything's just blast off into the moon. And that assumes GameStop keeps all the rest of their stores, right? Which they probably won't. This assumes that GameStop proper, which is, it also assumes they keep Australia. You know, GameStop US plus Australia is around 1,800 stores. They're probably going to get that down to at least 1,000. Woo! Woo! Pretty wild. What's the market cap going to be? That's what we can't wait to see. Leases. I mean, this is like store count number is one of my, I'm very highly anticipating this number right here. Let me show you. Boom. Very highly anticipating. Well, actually, I should put it over here. the total store count number, right? I cannot wait to see this number because all of this you could just say is speculation because this is the last number we actually have. Once this number comes out, it's out. Comparable same-store sales up anywhere from 30 to 50% on the top line. Bonanzas. I mean, that's just, that becomes news. It's not news for us, but it's news for the world. I cannot wait to see that number. The other number that I can't wait to see is probably this SG&A related number, which we already have for the other 3 quarters. But when you put it in full year terms, I cannot wait to see the cost cutting. I cannot wait to see the store count. Those 2 things are, to me, the most exciting catalysts as it relates to Q4. And a lot of the top line and the margins and the income and the operating income, I think a lot of that starts to get even spicier once you drop off Q1 and roll in Q1 of 2026. Can't wait. Cash, even though Bitcoin went down by 163 million, I think cash level might still be slightly up based on free cash flow generated within their business during Q4. Just depends on if they reinvested all of that or not. But pretty sweet. What do y'all think about these earnings? You think I'm off? And then if these are the numbers, are you happy? Are you sad? Or do you just base all of your emotions on what the stock does? I am gonna go pee real quick, and then let's watch the stock into close once I get back. Thanks for being here, guys. Woo! We back. They leased all their stores, Hill City Mushrooms. GameStop does not own their stores. Sorry, I'm responding to some people in my comments. Let me know if y'all think if I'm being sassy. Solid Squeeze, he doesn't like my eBay video. So I wanted to tell him that you are welcome to start your own channel and talk about whatever your viewers like to hear about. My channel is not regurgitation of clickbait that I want people of regurgitation of whatever other people want me to say. It's a genuine reflection of what I genuinely think, regardless of whether it's considered cool / popular or not. Hang in there. Is that too mean? I don't think so. Punky says, don't waste your energy on the trolls. That's how they win. Oh, I'm doing fine. I'm doing fine. These notification bell things have been annoying me. This guy really doesn't think that Target is a possible what does the GameStop cult have anything to do with whether Target can be acquired? Oh, geez. Oh my gosh. Do you hear yourselves? How many of me are there? How many of me are there? What's KSS? He's long KSS. Oh, he's long Coles. Oh, great. Congrats. I take it you did not fully watch the video or the other two that I mentioned. I have no clue what a GME cult has to do with Target's management or Kohl's for that matter. Thanks for the comments. Sometimes trolls are just a little trolly. Punky says there are so many bad paid actors out there. They target anyone doing good analysis. Yeah, it does seem to be the case. Like a lot of times it's like, oh, wow, you've never made a comment on my channel's history. And now you're like very against me in some reason. So it is what it is. But sometimes I like to humor people. Sometimes I'm not about it. But I agree. You got to keep the vibes up. You know, you just gotta be who you are. If I was what was I saying? Simon says bot calls for April. My bad, everyone. Oh, I was gonna say if I could just, you know, if I was a professional YouTuber, then I'd be a great professional YouTuber. You know, I could just make whatever people want me to say and whatever. Put some, I don't know. That's just like I'm not. So I don't. Punky says, I imagine they're all typing from Andrew Left's bathroom. Yeah, probably so. What do you think? What do you think? Is Ivy going up or down with this crash? All right, definitely going down. And Max Payne is 23, right? Oh, it got bumped up to 23.5. Wow. This is quite the exciting week preceding earnings. I agree, Beckett Cat. It's not a GME specific move. Everything's bleeding for show. Jonathan says trolls feed the algorithm. In that sense, engaging with them helps the channel. Yeah, I mean, if people cross the line, I'll block them for sure. But I don't mind a little bit of negative engagement if it's respectful and genuine. But yeah, usually people will just quickly identify themselves as like not actually having an educated opinion, and they're not interested in learning. It's just like oh, you asked me questions about what I think. Well, did you know that you're stupid? Like, they're like, I wasn't planning on saying anything that I think. I'm just here to attack you. So it is what it is. Overall market is, the SPY is actually rebounding a little bit, huh? Maybe just barely. Oh, no. No, it just hadn't refreshed yet. Yeah, look at this. Just gory red on some names that I like following right now. Kind of wild. Even T-bills. Crazy. 17 minutes to close. Beckett Cat, you can email me the fundamental analysis document. My email's on my channel. It's jeremy.br@gmail. Can I text that? There you go. But I typed that in code because the dot is actually a period. It's not spelled out. And the @ it's not actually @ it's an @ sign. All right. Yeah, send it along. I would like going through it. Drago says, so is it going to be a Black Monday? Yeah, that's the question. I mean, this is getting me kind of pumped because if it gets black enough, like that's kind of what you want to see. Bachman says plunge protection team woke up. Is 28 in reach post earnings? I think if 28 happens, it will be related to this plunge that's happening on the overall market. I don't think the reaction to earnings is going to jump us to 28. Like, I don't think there will be the wow things in the earnings. There could be wow collectibles, but probably not wow. Like, there could be impressive top line, but even if they hit the top of this range and they do 1.6 or 1.7, it's still not wow. It is wow when you think about the company and the store closures that they were still able to do that. But the wow is really related to store count and therefore sales per store and SG&A. Like, margins are going to be like this. It's not going to be wow margins. It could be a little better, a little worse. It's not going to be wow operating income. It could be a little better, a little worse. Nothing related to power packs or income tax is going to be wow. The only things that could be wow are SG&A, sales per store, and store count. those could certainly propel the stock higher. When you think about like 28, what does 28 mean? It would mean that basically the US and Australia business is getting a 23 PE or a 22.5 PE. So after these numbers come out, like, is a 23 PE for the go forward business in GameStop justifiable? Is it within reach? Definitely. Definitely it's within reach. But right now we're at 22, so it's also kind of like saying is what's that? That's a 23. So yeah, I mean, is it like a 23.5 is available? I mean, yeah, 23 is in reach. Or sorry, 28. 28's in reach. Even right now, we're still above what I call the fundamental floor, for even just for US and Australia. So similarly, if you were to call it like a 25 on just the base business, it's got to be higher than that. 27 or a 28 PE on the base business would also get you there. I think it's easier to think about it as just the go forward business. This makes it look a little bit richer when you base it off of the whole pie. When you base it just off of the go forward business to say, hey, they deserve a 23. Yeah, that could happen. That could happen. If they include power packs this time, yeah, they could choose to do that, which would be a tricky GameStop thing to do. I'm over here like seeing, do they have to? Let's see the numbers. Okay, no, I don't think they'll have to. I think they'll be able to hide this still within their threshold, so they probably won't have to. If they do, then you're looking at what type of price to sales do you give a brand new company and you annualize their sales. If you annualize 80, let's say they're annualizing at 300 million in sales, but let's say they discount Q4 a little bit because it's Q4. So let's say they're annualizing at 250 million. What type of price to sales do you give that? Maybe they give it, let's say to be round, they give it about a 4 price to sales, which would be a little lower than what other gambling related startup companies have gotten. They might be in a 5 to 8, 5 to 9 price to sales. So to give power packs a 4 on a price to sales at first, if they're doing 250 in 12-month revenue, that's $1 billion in value. So if $1 billion comes online, you divide that by 447 million shares, it's about $2 a share. So how do you get to 28? You say the go forward business is getting a 23 PE, or you say that the go forward business is getting a 20, but also Power Packs comes online and gives you about $2 per share of a bump, right? I don't think Power Packs will come online, but I think it would be worth about $1 billion if it came online right now. So those are a couple thoughts there. You bet. Real Mr. E. Mr. Beaker said, what do I think that a deal fell through following GameStop's Shallow Man post? I don't think that a deal fell through, but I do think it's possible. I could give it a 15, 20% chance, but I don't really care because GameStop can hostile take over like a lot of companies that would be pretty exciting to me for them to own. So I think that the timeline, Hollowman, not Shallowman. Yeah. The Hollowman of YouTube is the video I made that night. I think that the plan has always been get people pumped about an acquisition, but don't do anything yet. Report earnings, then do the vote, then announce the acquisition. So I would think like May, June, July, we're talking acquisition announcement, Q1 numbers, huge growth in trailing 12-month income, Power Packs comes online, asset management comes online, and we are still, 3-4 months away from the October warrants. So you start to see plenty of time left for IV to explode, right? We also, like, historically, May, June has been kind of a pump season on the stock, right? We hit 33 last May. And then, May, June the year before was obviously the big pump following the April earnings announcing full year net income. So we knew we weren't going bankrupt anymore. But also June in 2023 in May, like, got down to 16, got up to 25. In 2022, it was a little bit more volatile. Nothing necessarily to be excited about, but still we did go from 24 up to 34. But we were just at, 41 before that. But also in even in 2021, right? Down in April, and then boom, like we went from 38 up to 62 April to June. So again, timing it out with those types of rhythms, it's just another reason why I would think that a lot of the chips are going to start getting put onto the table in May, June, July. Maybe some of the chips are getting put in April, right? But I think that April to July window is really, really spicy for so many reasons. I think and it's not that far away, right? You get the full year numbers. It takes a little bit longer for them to finish making them. So the time between Q4 numbers, which is we get next week, and then Q1 numbers is not quite as long as the gap between Q3 and Q4. So anyways, and we might start to see some momentum on the stock before Q1 numbers even come out. We might get to see some a vote happen before that. I think we will see a vote happen. I think the vote will be announced within the 10K. I think they'll announce the date or whatever, the day after or whatever. They'll announce the date for the vote for Cohen's compensation. And I definitely think they're going to do that vote before they make an acquisition announcement. Drago, by the way, said that if GME goes under 20, he's full porting into this. I have already full ported. So I can't say that I'm rooting for it to go below 20 because I don't have anything more to put in. I'm all in personally. But I don't think it will go below 20. As far as disappointment, though, what's up, John Today? He said he's been waiting for sub 22. So he's pretty pumped that we're almost there. I'm really curious to see what happens Monday and Tuesday before earnings. Simon bought calls for late April. So you are the reason that it's dumping today. So that your calls can get screwed. I don't like late April as a strike, as an expiry personally. And IV is also not as low as it's been for, like, it's not super low. It's not super high. But it was actually getting pretty high, like a couple weeks ago, 2 weeks ago, 3 weeks ago. It was like the highest point it's been basically since the convertibles. So I don't think you got a great price. But I'm rooting. I would love to see it squeeze. So, I'm rooting for you and for me. Warrants at this price, it's kind of like, I'll make a video about warrants one day soon, but they're a little bit lower than they've been in a little while. which is kind of fun, but still way, way out of intrinsic value. So it's still a risk, but they are extendable. So you got to figure your risk is a little bit hedged compared to a typical call option. And if you're thinking that May, June is going to be when the spike happens, then to have an October expiry is not a bad idea to give yourself time to where you're not getting crushed on the theta. OMG says maybe we have a squeeze next week with the market crashing. Yeah, that's what I'm so interested to see. Like historically, often we have rallied. GameStop stock has rallied heading into earnings and then dumped post earnings. So with it dumping leading into earnings, does that mean that we're going to rally post earnings? You know, we've already shaved 8%. It's crazy. So if we've already shaved 8%, it's like, are we really going to dump from here? It's hard to it's not hard to imagine because we've seen it happen. Like we've seen 20 a share. We're used to seeing 20 a share. So in that sense, it's not hard to imagine. But when you think about earnings, like you just got to figure if the market keeps dumping, you would think that GME might rally a little bit Monday and Tuesday. But if GME rallies a little bit Monday and Tuesday, then it makes you think like maybe they really will dump it post earnings. And if you're looking for a reason to dump it, I don't think it's going to be hard for short sellers to create a negative narrative. If we're looking at, oh, look, quarter over quarter, margins are down. Oh, look, top line, let's say they miss this 1289 I'm talking about. Oh, top line is down year over year or flat. Look, Bitcoin loss, right? What else? Net income, right? Down year over year. You wouldn't even say it's related to Bitcoin. You would leave Bitcoin out of the title and you would say, look, net income is down year over year, right? And everyone who knows anything would say, literally, that's just related to Bitcoin. Operating income is up 100% year over year. If you want to make a bullish headline, operating income is up 100% year over year. SG&A is down 20% year over year, down for the fourth year in a row. Margins up year over year for the fourth year in a row. Sales per store crushing, absolutely going bonanzas, right? So you would have plenty to work with on either side, or that like silences the short seller and like, oh, there's nothing you can say that would be interpreted as bearish. I'm like, well, if you want to make a disingenuous article attacking the stock, it wouldn't be hard to following these earnings. And to me, that's like the final bear trap, the final nail in the coffin. So, and I think that's kind of how Cohen's thinking about it too. So maybe we do dump, maybe we end up back at 20. Drago says maybe we fill the gap around 21, 25. Like, I think that is possible post earnings, but I would think that if that happens, we will see a little bit of rally Monday, Tuesday. If we're dumping Monday, Tuesday, like if by Tuesday midday we're at 21, 25, it's hard, it's hard to say that we're going to end the week much lower than that. Again, it's totally possible, but at a certain point, you just don't want to be too greedy. If you're talking about shares, if you're thinking about, I want to buy more shares, and at Tuesday at noon, it's at 21 a share, and you think that by October it's going to be at 35, 40 plus a share, it's like, look, it might go to 19, but do you really want to risk $20 of upside over $2 of downside? At a certain point, the risk reward is just so enticing that you have to kind of like stake your claim a little bit. If you're buying calls, though, of course, it's a totally different reality because then you like the IV to buy a call before earnings would be so risky. Even if you're buying it 6 months out, you're paying a premium for the pre-earnings IV. And if it's 21 on a Tuesday and you think, should I buy a call? I would probably say probably not. Maybe wait till it dumps and see if you can scoop it up at a better price at some point in the days or weeks following. Probably. I'm not a big call buyer though. So used to be, but I've made and lost way too much money to keep that as a habit in my life. There you go. 22.55 is the close. So we ended above the 22.5s, but well below the 23.5 max pain. XEJI says we pretty much just at a standstill until the CEO vote goes through. I generally agree. I do not think, and I've said this several times, I don't think Cohen is interested in GameStop getting close to 20 or 30 billion in market cap when the tranches for his compensation are at 20 and 30 billion in market cap. Like, I think he needs the stock to stay low before the vote happens, but that cuts both ways because after the vote happens, it's like all bets are off. And if all bets are about to be off and a lot of people think that same way, then honestly, the other most exciting part about earnings is what's the date for the vote, right? Cohen comp vote. Like this, once that date is on the calendar, that is so consequential for anyone that's trying to play the stock. And if it's on the calendar, like they could put it on the calendar for next week. If they give earnings on Tuesday and then Wednesday after hours, they publish a news thing on their site, write a little news release. Hey, we've announced a date for Cohen's comp thing. It's a week from now. Who knows when it is. But if they do that, all of a sudden there are people that have been waiting for that then can say, hold on, I got to get in because once this thing goes through, like it's green pastures and a nice runway. We have to, I think that could be a catalyst for some momentum. But then I think it would come back down post the plan being approved. But then again, I think that once the plan's approved, it's T minus who knows how many days before the next domino starts to come. And we're almost to April, and April is right before May, right? And May, June of this year is shaping up to be a really exciting window of time, in my opinion. So I don't think you're going to have to hold the warrant to expiry if you don't want to. Obviously you can sell it any day you want, like you don't have to hold on to it. But I think they'll be in June or July than they are right now. I do. Anyways, any other thoughts about earnings? I wanted to give a full rationale estimate for all of the above. I guess we could talk about what all these would mean from a full year basis real quick. Boom. Boom. Oh, don't be doing that. Golly. Look at that. On a full year basis, net income's about to triple. That's crazy. Net income about to triple. Margins crushing year over year all over again. And SG&A as a percentage of sales divided by AL12. Show me that in percentage terms. Woo! No way. That's got to be wrong. Oh, yeah, that's just store related. Okay. Golly, 23%. Holy crap. That's crazy. Last year, SG&A as a percent of sales, 29.57%. This year looking like it might be 23.44%. Net income tripling year over year on a full year basis. I mean, not quite, but still. Operating income from a $26 million loss to a $260 million gain. Holy smokas. And then look at the top line, guys. Golly. Look at that. Oh, if they beat my estimate by freaking $9 million, then our top line will grow for the full year. Year over year, it is in play for top line sales growth. Oh my gosh. We got to see it. You got to show it to me. Sales growth. Let it be. That would be crazy. With 1,000 fewer stores? You know what I mean? How many stores would that be? Oh. Just show me 1,050 store closures plus 311 about to drop off in France. Like, golly. That's wild. And look where all that revenue growth is coming from. 387 million more collectible sales than just a year before. On fewer stores, right? On 1,000 fewer stores, 380 million more sales dollars. Crazy. There's the sales per store. Which is crazy. $230 more million in net income. And that's even net of the Bitcoin loss, right? Net income grew by 235 million. Operating income grew by 285 million. SG&A came down by 236 million. I'm just saying, if these numbers come out, again, it might not wow everyone, but like, it's hard to be pessimistic. You could be impatient, sure. Like, oh, I want the icing on the cake. I want it to finally reflect in the stock price, right? But if these are the numbers that come out, it's stinking impressive. Patrick says, your streaming stamina is awesome, Mr. For Life. Thanks, Patrick. I'm about to hang it up. I'm about to hang up the cleats, but not hang up the cleats. Like, my stink is impressive. Thanks, dude. How do you even know that I stink, bro? I haven't even showered today. How did you know that? How'd you know that? I'm about to hang it up for today. But I'm excited to we get to make some new columns. You know, we got to make this look pretty. We got to get 2026 mapped out. But I'm just saying, if these are the numbers, there's going to be, and maybe, you know, let's see, I could be 70% off again, but I was all over it. 250 on collectibles. There's two versions of my estimates. There's one version that was my first version. That was my bottoms up estimate. I had it at 253, which was, what was that? 3 divided by 256. 1% off. I was 1% off on collectibles. Insane. On my first version. On my second version, I YOLO'd into Cohen's quote, collectibles being just about a third, combined with my way off, my 70% off hardware estimate. And that got me way off on collectibles too. Because I was just thinking about collectibles as it relates to hardware, but my hardware was way off. I don't remember what that number was, but it was also, I mean, it was probably 70% off also. So anyways, we'll see. But apart from that hardware debacle, honestly, Q3, I kind of nailed it. I didn't take as much time on Q4. I just did it all in this one stream. So maybe I'll end up with more errors because of that, but excited to find out. Oh, I said that's stinking impressive. That was the joke. Beckett said, your stink is impressive. I got you. Yeah, Beckett says he emailed me his fundamentals. Let me see. What's up, Beckett Cat? Beckett Cat. Cool. Here, I'll throw it up on here. Here's Beckett Cat's sheet. Is this okay, Beckett Cat? Can I show your sheet? I just hit it in case you don't want me to. I can look at it at my free time if you want. Oh, he says yes. I did cover Nintendo's Q4 hardware sales, Jonathan, in a clunky way. But I did. I didn't in Q3. That's why that was my fatal flaw. What are we looking at here? Fundamentals. Q2. Oh, this is 2018. Okay. Oh, look at all these colors. Pew, pew. Pew, pew. Okay, so Beckett's got, where are we at? Q3. Okay, these aren't, oh, this is Q4. This is your Q4, estimates. Q4 2025. This date here is throwing me off because I don't know why. Okay, it is. So Beckett says, I'm too low on stores. Oh, because you're keeping Canada in there also. We're actually right on the same. We're on the same page as far as. Oh no! That's France plus Australia. Duh. Oh, he says the data is completely wrong. Power Packs revenue. Let's see. Who knows? We're in a pretty similar place as far as Power Packs revenue. He has it at 50. I have it at 80, which means GameStop's portion would be 40. And we're on the same on income at 5. It's kind of fun. He's got 1.2 estimated revenue. So I think I'm about 100 million, about 90 million higher on total revenue. Most of that difference coming from hardware software. I'm a little higher than him on hardware software, a little lower than him on collectibles, which is fun. Gross profit, though, he has even higher than mine. So even though he has less, so he's expecting a nice bit of better margin, which there would be better margin in collectibles compared to hardware. So if collectibles does a little better and Switch sells a little less, then the margins would be a little higher. But even the gross margin percentage net of that, I think he's still a little bit. I think Beckett, you're still a little bit higher than me. He says check the SG&A formula. Boom, boom. AK 33. Boom, boom. Divided by AG. Yeah, just keeping on the same trend as the declines that we have seen so far, basically. And overall, he ends up with EPS a bit higher than these estimates. So Beckett has us beating on bottom line, missing on top line, which would be wonderful, of course. It's very fun. I'll look at this more in my free time. Assets also coming up a decent bit. So that's fun. But I like it. It's very, this was very, what's it called? Richard Newton-ish, you know, the text style. I'm like, so familiar, you know? Yeah. I miss these videos. These were fun. Swap roles and all the things. Anyways, thanks for sharing, and I'll dive more into that. Yeah. Started with his and went from there. Bubbles also told Richard. Richard, how are you doing, my friend? You're not my friend yet, unless you want to be. But I've never talked to you, Richard. But just so you know, I appreciate the work you did for the community. Okay. I probably need to hang up the phone here in a sec. But thanks for everyone who participated. I need to go talk to wifey, figure out what we're gonna do about grandma. It's a little bit sad, but much love to everyone. Excited to see what happens in the stock in the beginning of the week, and excited to see what happens in the earnings numbers, and excited to see what happens to the stock post earnings. But most of all, for me, most excited about basically May and June / Q1 numbers. I think in April too. You could throw in April and July in there as well, but April through July, I think it's fun season. I think summer's out. School's out. Summer's in. It's party time. April to July. Probably, maybe. Even if it's not, the comforting reality is these numbers are showing great improvement year over year. And if we keep doing that, improving greatly year over year, then guess what? This thing is going to move. It might not move mountains overnight, but I am a believer in fundamental analysis and in the fundamental value of a company. And unfortunately, many of us got involved in a technical play that has not really panned out yet since the sneeze from a technical basis. The fundamentals are just now coming online. The fundamental play has just begun. It just begun. Not even a year ago. The fundamental play began. So I'm very excited to see how that ultimately buoys and carries the stock to new heights. Glad y'all are part of it. Glad y'all have at least some sense of value for fundamentals. All right. That's all I got for y'all today. Let me know in the comments if you're watching this after the fact, any earnings assumptions you think are too high, too low. What are you excited about to see in their earnings, to find out about, etc.? What do you think is going to happen to the stock? Let's talk about it. All right. That's all I got for y'all today. I will see you in the next one.